Hey everyone, welcome back to Corporate Decoder, the place where we can make complex financial jargon as clear as a freshly cleaned window pane. This filing from Horizon Technology Finance Corporation might seem like just another government form, but it holds clues about how a company that finances technology really performed lately. Stick around as we decode what it all means. Before we dive deep, if you love getting straight answers from these dense corporate reports, make sure you hit that subscribe button. And hey, we've got a fantastic community over on Discord, linked in the description below, where you can chat with fellow finance enthusiasts. Alright, so Horizon Technology Finance Corporation has just dropped its current report, basically an update on what's been happening with the company's financial health. This filing is especially important because it announces their financial results for the 3 and 6 month periods that ended on June 30th of 2025. It's like getting a mid-year checkup report for the company. Now, like many companies these days, Horizon Technology Finance Corporation has its common stock trading on a major stock market, specifically the Nasdaq Stock Market LLC. They also have a couple of different types of notes, which are essentially ways the company borrows money due in 2026 and 2027, having different maturities for their debt is pretty standard for companies, allowing them to manage their cash flow and borrowing costs over time. The fact they have these notes is significant. They are basically promising to pay back lenders a certain amount of money plus interest by those specific dates. The interest rate on one set of notes is 4.875% due in 2026, and on another set it's 6.25% due in 2026, and on another set it's 6.28% due in 2027. These rates help us understand how much it costs a company to borrow money and how attractive those borrowing terms are compared to market conditions at the time they issued them. It's like seeing the price tag on their debt. The real juicy stuff, the financial results themselves, were released in a press release on August 7th. This report tells us they are sharing their performance for the first half of the been doing financially before the recent news. This is what we really want to dig into. When we look at financial reports, we're always trying to understand the story the numbers are telling. Is the company growing? Is it profitable? Is it managing its money wisely? This filing is focused on what they call results of operations and financial condition. So we're getting a peek behind the curtain to see how the business is actually operating and what its financial standing is. And the report is signed off by Michael P. Balkin, the Chief Executive Officer. That means he's officially attesting that the information presented is accurate to the best of his knowledge. It adds a layer of accountability to the filing. So what's the big picture here? Horizon Technology Finance Corporation is reporting on its performance for the first 6 months of 2025. This includes how much money they've made and what their financial situation looks like now. While this particular filing doesn't contain detailed financial tables directly within the main body of the 8K, it directs us to a press release for those specifics via Exhibit 99.1. The key takeaway is that the company is providing a regular update on its operations, which is crucial for investors to track its health and progress. Now let's put on our investor hats and think about what Horizon Technology Finance Corporation does, not just what this report says, but who they are. They are a finance company, specifically focused on the technology sector, which can be a very dynamic and sometimes volatile industry. Companies like this often provide capital to technology businesses, meaning they lend money or invest in them, and in return they expect to make a profit from interest or equity gains. The fact that they're reporting on June 30th results in August tells us about the timeline of these financial updates. Companies have to gather all their data, compile it, get it reviewed, and then file it with the Securities and Exchange Commission. There's a process involved, and the timing can give us clues about how quickly they can get information out, which can reflect their internal controls and reporting efficiency. When we consider their debt with interest rates of 4.875% and 6.25%, we can infer a few things. If these rates are higher than what their competitors are paying, it might indicate that Horizon is facing a tougher time borrowing money, or that the market perceives them as having a higher risk profile. Conversely, if these rates are in line with or better than industry averages, it suggests they have access to capital at reasonable costs, which is a good sign for their ability to fund their operations and investments. The inclusion of the AHO-Cage interactive data file, often in XBRL format, means that the core financial data is structured in a way that computers can easily read and process. This is part of a broader push for transparency and accessibility in financial reporting. For us, it means that if we were to dig into that data file, we could potentially analyze their financials with specialized software much faster. From a Warren Buffett perspective, we'd want to understand this company's business model thoroughly. How do they make money? What are the specific types of technology companies they invest in? What's their track record in lending to these companies? Are they picking winners, or are they picking companies that are likely to default? Are their loan portfolios diversified across different technology, subsectors, and stages of development? A strong management team, like the one led by Michael P. Balkin, needs to demonstrate not just an ability to raise capital, but also an exceptional ability to deploy that capital wisely, generating returns that consistently outperform the cost of capital and the risks taken. We need to look at the underlying press release that Exhibit 99.1 refers to. That's where the actual numbers about revenue, net income, earnings per share, and the value of their investment portfolio will be found. Without those numbers, this 8K filing is just the announcement that those numbers have been released. It's like getting an invitation to a party but not yet knowing who is there or what food is being served. But let's consider the general landscape. The technology sector itself can be high growth but also prone to disruptions. A finance company that specializes in this area needs to be nimble, constantly assessing which technologies and companies are likely to succeed. If Horizon is investing in early stage year but perhaps lower, their investment strategy and their ability to manage the inherent risks of the tech sector are paramount. We also need to consider the broader economic environment. Are interest rates generally rising or falling? How is venture capital and private equity activity in the technology space? These external factors can significantly impact a finance company's performance, affecting both its ability to fund itself and the success of its investments or loans. If the press release highlights strong revenue growth and profitability, that would be a positive signal. On the other hand, if it shows declining revenues or losses, we'd want to understand why. Are they facing increased competition? Are their investments underperforming? Or is the broader tech market experiencing a downturn? For Horizon Technology Finance Corporation, success hinges on its ability to identify promising technology companies, provide them with the right kind of capital, and then manage those investments to achieve positive returns. Their debt structure with notes maturing in 2026 and 2026 and 2027 means they have upcoming obligations to repay those lenders. How they plan to meet those obligations, whether through new borrowing, asset sales, or cash flow from operations, is a key part of their financial strategy. In essence, this filing is a signal. It tells us that Horizon Technology Finance Corporation is actively reporting its financial status and that more detailed information is available. The true analysis will come from diving into that press release and understanding the specific financial metrics that showcase their revenue, expenses, profits, and the overall health of their investment portfolio. Now, looking at these results more broadly, Horizon Technology Finance Corporation is playing in a very dynamic space. The technology sector is where innovation happens at lightning speed, and being a finance provider in this arena means you have to be smart, adaptable, and good at picking winners. Their success really depends on how well they can manage the risks that inherently come with backing new technologies and potentially unproven businesses. On the positive side, if they are indeed successful in identifying and funding high-growth tech companies, their returns could be very significant. However, a key risk for any such company is the concentration of their portfolio in one sector. If the technology market hits a rough patch, the impact on Horizon could be substantial. It's a fine balance between seeking high rewards and managing the inevitable risks. Alright, that's our initial decode of this Horizon Technology Finance Corporation filing. Remember, the real meat is in the press release they've attached, so that's our next stop for a deeper dive. What's your take on companies specializing in tech finance, and what signals do you look for? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more straight up financial insights. And don't forget to join our growing community on Discord, linked in the description. Thanks for watching, and we'll see you in the next decoding.